Welcome to a new video on my channel. Today, I want to take you into the fascinating world of emerging markets. Over the past 2 decades, the global economy has changed dramatically, and many nations that were once on the fringes of the international stage have begun to play an increasingly significant role. In this video, we'll explore the impressive development of these countries, how they've been able to unlock their potential, and what opportunities they may offer to investors in the future. Emerging markets, also known as developing economies, have been in the spotlight for international investors over the past 20 years. But what exactly does it mean to be an emerging market, and what factors have accelerated the growth of these nations so rapidly? That's what we'll discuss in detail. We'll also highlight the stories of some of the most important emerging markets, including China, India, Brazil, Russia, and many more. The last 20 years have been a time of great change for many of these countries, with tremendous economic growth, a rising middle class, and technological advancements. We'll also look ahead to future trends. What might the future hold for these nations? Which sectors and industries are particularly promising? And why could now be the right time to invest in these emerging markets? Let's dive into these exciting topics together.
Insights for the informed investor.
Chapter 1. What are emerging markets? Before we focus on individual countries, let's first take a step back and define what emerging markets actually are. Sometimes you'll hear the term developing economies, but essentially both terms mean the same thing. Emerging markets are nations that are in the process of transitioning from developing countries to fully industrialized economies. They often have rapidly growing economies, but their infrastructure and institutional frameworks are not as stable as in the developed economies of Europe or North America. There are many reasons why these countries attract so much attention. First is their immense growth potential. In many of these nations, the economy is growing at double-digit rates, attracting investors seeking high returns. Secondly, many of these countries have young, dynamic populations that are eager to adopt new technologies and products, further driving economic growth. Thirdly, many emerging markets are rich in natural resources that are in high demand in the global economy, from oil and gas to rare metals and agricultural products. Emerging markets are often in a dynamic tension between development and modernization. They are striving to transform from agrarian societies into urban, industrialized economies. However, they often struggle with corruption, political instability, and inadequate infrastructure. But these challenges also offer opportunities for investors willing to take on risks. Some of the most well-known emerging markets are grouped under the term BRIC countries: Brazil, Russia, India, and China. These nations have undergone tremendous economic transformation over the past 2 decades and are considered key markets for the future. Yet, there are many other rising economies such as Vietnam, Indonesia, and South Africa, which could also play a significant role in the coming years. Chapter 2. The growth of BRIC countries. 20 years of growth. Let's begin by looking back at the development of the BRIC countries: Brazil, Russia, India, and China. These 4 countries have had an impressive journey over the past 20 years. They have significantly influenced global GDP and nearly redefined the term emerging markets. China, the rise to superpower. We'll start with China, perhaps the most impressive example of economic success over the past 2 decades. Looking back to 2000, China was just beginning to open up to global trade. In 2001, China joined the World Trade Organization, WTO, which marked a crucial turning point in the country's development. The government pursued an aggressive growth strategy, building up industries and transforming the country into the world's factory. China's economic rise is almost unparalleled. The country has evolved from a largely agrarian state to a global industrial powerhouse. Today, China is the second largest economy in the world, only behind the United States. But it's not just manufacturing that has made China so powerful. In recent years, the country has also made enormous strides in technology and innovation, Chinese companies like Huawei, Alibaba, and Tencent are among the world's leading tech giants. Another reason for China's success is its massive domestic market. With a population of around 1.4 billion, the country offers enormous consumption opportunities. However, China's success is not without challenges. Demographic changes, particularly an aging population, present future difficulties. Nonetheless, China is expected to continue playing a leading role in areas such as renewable energy, artificial intelligence, and 5G technology. India, the quiet giant. In the shadow of China, India has been slowly but steadily establishing itself as one of the world's most important economies. India has a young and growing population, giving the country a significant advantage. Unlike China, where the population is gradually aging, India has a demographic profile that strongly indicates future growth. About 50% of India's population is under 25, and this demographic dividend is expected to last for decades. India's economy has stood out particularly in the IT sector. Cities like Bangalore have become global technology hubs, and Indian IT service providers like Infosys, TCS, and Wipro are among the leading companies worldwide. The services sector as a whole is also growing rapidly, and India's middle class is expanding faster than in many other countries. However, India also faces challenges. Infrastructure in many parts of the country remains weak, and significant inequalities persist. Still, the long-term outlook for India is positive. The country could even surpass China as the world's most populous nation in the coming decades, further driving consumption and economic growth. Brazil. From commodity boom to recession and back, Brazil, the largest country in South America, has experienced a wild ride over the past 20 years. The country benefited massively from a global commodity boom in the early 2000s. Soybeans, coffee, iron ore, and oil are just some of the resources Brazil produces and exports in large quantities. This wealth of natural resources helped the country diversify its economy and build its infrastructure. However, Brazil's economy was also highly vulnerable to fluctuations in commodity prices. When commodity prices dropped in the 2010s, Brazil plunged into a deep recession. Political instability and corruption further eroded confidence in the country. But signs of recovery are emerging. Brazil has the potential to play a leading role, especially in the renewable energy sector. The country's enormous hydropower resources and growing demand for green energy could be key to its recovery. Russia, energy exporter and geopolitical player. Over the past 20 years, Russia has positioned itself primarily as an energy exporter. Oil and gas are the pillars of the Russian economy, and the country has benefited greatly from rising energy prices. The European market, in particular, is highly dependent on Russian gas supplies, giving Russia a certain geopolitical influence. However, Russia also faces economic challenges. International sanctions and political tensions have stifled growth, and the country faces the challenge of diversifying its economy. Russia's heavy reliance on fossil fuels could become a problem in a world increasingly shifting towards renewable energy. Nevertheless, Russia remains a major player, especially in the military industry and in technological innovations in the energy sector. Chapter 3. Emerging Markets. Outside BRIC, opportunities beyond the Big Four. In addition to the BRIC countries, many other nations have made impressive strides in recent years and could play an even bigger role in the coming decades. Countries like Vietnam, Indonesia, Mexico, and South Africa have emerged as rising markets and offer exciting opportunities for investors. Vietnam, the new manufacturing hub of Asia. Vietnam is a country that has undergone an impressive transformation in recent years. Just 20 years ago, Vietnam was heavily agricultural, but today it is one of the most important manufacturing locations in Asia. The textile and electronics industries in particular have grown rapidly, largely due to the relocation of manufacturing plants from China. This is due in part to lower labor costs and the stable political environment. For investors, Vietnam offers an interesting mix of steady growth, increasing consumption, and a developing domestic market. Especially in the area of technology production, The country is expected to continue growing as more multinational companies invest in Vietnam to reduce their dependence on China. Indonesia, the sleeping giant of Southeast Asia. Indonesia is the largest country in Southeast Asia and has positioned itself as one of the fastest-growing economies in the world in recent years. With a population of over 270 million people, the country offers a massive domestic market, driven by a growing middle class and urbanization. The resource sector plays a central role in Indonesia's economy, but the service sector is also growing rapidly. Indonesia is rich in natural gas, coal, and palm oil, and has benefited greatly from these resources over the past few decades. However, the government has recognized the need for diversification to succeed in the long term. The focus is increasingly shifting to the technology sector and the promotion of startups. With a young and increasingly tech-savvy population, Indonesia could become an important tech hub in the region in the coming years. Chapter 4. The role of demographics. A crucial factor in the growth of many emerging markets is demographics. While countries like China and Russia are struggling with aging populations, other nations can count on young and growing populations that drive economic growth. India is the prime example here. With a population where more than half is under 25, the country offers enormous growth opportunities. A young population means a larger workforce, more consumption, and strong innovation potential. Countries like Indonesia and Vietnam also benefit from favorable demographics. However, demographic growth alone is not enough. Education and infrastructure must keep pace to unleash the full potential of the young population. Many emerging markets are investing heavily in education and infrastructure projects to harness their demographic advantages. But there are also challenges. Rapid population growth often puts additional strain on public services, and the risk of unemployment among young people is higher in countries with poor education systems. Chapter 5. What's next? Future trends and outlook. We've talked a lot about the past, but what about the future? Which trends will shape the development of emerging markets over the next 20 years? First and foremost, technology will play a central role. Emerging markets are investing heavily in digitization, artificial intelligence, and renewable energy. Countries like China and India are already leading in the field of renewable energy, and many other emerging markets are likely to follow suit. Second, urbanization will continue. As more and more people move to cities in search of better jobs and higher standards of living, infrastructure and housing demand will increase. This trend will create opportunities for investors, especially in sectors such as real estate, transportation, and technology. Finally, emerging markets are likely to diversify their economies. Over-reliance on raw materials has made many countries vulnerable to price fluctuations. In the future, we will likely see a shift towards technology-driven growth and the expansion of the service sector in many emerging markets. In conclusion, emerging markets offer exciting opportunities for investors, but they also come with risks. It's important to stay well-informed and thoroughly analyze each market before investing. But with the right strategy and a little patience, emerging markets can be a fantastic long-term investment. Thanks for watching this video. If you found it helpful, don't forget to subscribe to my channel for more economic and financial content. See you in the next video.